You went from 7 million I'm talking US dollars, 7 million in revenues to about 50. What drove that?
Well, thanks for having me on. I think a few different things drove that. One, I mean, we started off the year quite strongly with Chinese New Year, headlined by Detective Chinatown. It was a local language film that just did great business for us. We have record local language box office happening in the market for the first half of the year. We did about $63 million in local language box office. And our theater installations and maintenance business is doing quite well as well in terms of, higher than where we were at in 2019. Hollywood films are performing really well when we are playing the Hollywood films. We had Fast and Furious, we had Godzilla, we had Avatar, and they performed exceptionally well. In terms of the number of films, we had fewer this first half than we have previously. We expect a lot of that to happen or to get deferred into the back half of the year. But overall, local language box office, theater installations, and on the limited Hollywood films that we've had, we've performed exceptionally well on them. So we're really happy with where we ended up coming in at for the first half of the year.
And Jim, your base case expectations for the second half?
Yeah, I mean, look, we're traditionally speaking, Hollywood films, take up a lot of box office in the second quarter, given all the COVID, all the influence COVID actually had on the release slate this year. We expect a lot more Hollywood films to be getting in the back half of the year, so we expect the slate on Hollywood side to somewhat normalize, which is really what we do exceptionally well on. And again, as I said, our theater installations business continues to be pretty strong. Our signings continue to be pretty strong. I think people are really receptive and they sort of see the results that we're generating on not only Hollywood films, but on local language films. So, hopefully we're going to finish off the year quite strongly in the back half with all of those things working to our advantage.
Jim, the last time we spoke to you, you mentioned about adding 400 theaters in China by 2023. Is that still on track, or have you had to adjust that target?
Yeah, well, right now we're at 759 theaters open. We've got about 237 theaters in backlog. So, contractual and backlog over 1,000. Signings activity we're quite happy with as well. And, obviously things have slowed down in 2020 given everything that's going on, but we still see a lot of opportunity in the market. Local language films are getting stronger and stronger. Hollywood films, we're performing exceptionally well on it. We think that in the market overall, the premiumization of content, when people go out to movies, they want to see these big blockbusters, and that's the type of content that's going to the big screen, and it really lends itself well to us. So, as a result of that, I think people want to, go to theaters and see movies in Imax, and we just kind of create an experience that people want to leave the home for and experience in the movie theater setting.
The market share for Hollywood films in China, Jim, has fallen, though, or has slowed down from, I think, 36% the year before to 16% last year. I'm just wondering, what's your outlook? I mean, you still seem to be quite optimistic about the Hollywood film side of things, but we're against a backdrop of U.S.-China relations that are deteriorating, and there is this growing sense of nationalism against foreign brands now.
We're very, very focused on local language content. As I said, Chinese New Year was really strong for us with 3 big local language films. Detective Chinatown was, as I said, the headline. Right now, we're playing a lot of local content. Currently, we're playing a film called White Snake 2, and we're expecting to play a couple of other films, Raging Fire, Battle of Lake Changjin coming up. So local content is a very important part of our strategy going forward. And we view it as growing, and we view it as a really, the more we grow that box office, the better it is for our business. Hollywood films, while their market share went down last year, we obviously think that there were other reasons at play with that. I mean, with COVID and with the sort of delays in Hollywood releases as a result of, a lot of markets shut down globally, things slowed down. So we do view, look, Godzilla versus Kong came out, it did really well. Avatar came out, did exceptionally well 10 years later. Fast and Furious came out, same sort of thing. So we feel that there's still a strong appetite for good Hollywood content in China. But having said all that, again, we're very focused on local language content as well. We know what percentage of the box office it makes up, and it becomes very important.
Jim, very quickly, so have you got local partners in that whole localization strategy, and is that part of a rejig of your business model for China?
No, it's always been a part of our business model in China. We definitely are continuing to focus on it. Hollywood films previously really lent themselves to our format, obviously, the sort of big, epic blockbusters, and local language films are starting to sort of lend themselves to our format as well. So, the local studios here are working with us and they see the value add that we have and the premiumization that we offer to customers. And they view it as a really unique opportunity to sort of build their film and position it well in the market. So it's always been a part of our strategy, and it's growing more as the production changes.
Jim, very, very quickly, just just tell us which movie you're most excited about in the pipeline.
Well, I mean, there's a couple coming up. Bond is coming up in the back half of the year. It's going to be the last film with Daniel Craig, shot with Imax cameras, so we're really excited about that. That's my personal, what I'm looking forward to overall, so it should be really great.
Jim, final question. I noticed that you guys increased your dividend payout ratio, traditionally 50%. Is that an indication of, I guess, your attitude and your outlook for the market, when normally a lot of people in the corner office would normally be a little bit more conservative with their cash?
Yeah, I think it's exactly what it is. I mean, our business generates strong cash flow. We have a lot of confidence in our business going forward. We think we have an ability to fund that dividend and return capital to shareholders. So as a result, we increased the payout ratio from 33% of net income to 50% of net income in February of this year. So yeah, I think that's, it is a reflection of sort of our confidence in the business and our strong balance sheet that we can actually do that and continue to develop our business the way we've been doing it.